As promised, this is my Q3 earnings preview video where I will be diving into what I am expecting about tomorrow's earnings of NIO and also what kind of numbers I'm watching and also how I'm personally dealing with the situation that the stock is pretty volatile and also what could be the implications on the stock price after the earnings. So those who are following and have been subscribing to the channel, you're awesome. We break 30,000 subscribers finally. Make sure to hit this bell button that you get a notification whenever I post a new video. And you guys know already that I do this with each of the earnings call. What happened last time? Well, I also made my estimations and they have been quite conservative, so they have been broken on many occasions, and it was quite an awesome earnings last time, actually a breakthrough in my opinion. And then what happened afterwards is I popped the champagne, that became a meme. In the end, the share price tanked a lot after earnings, and this already tells you a lot about how these events can unfold, quite into the contrary than you would actually expect them to be. But ultimately I was right that with the new margins reported last time, with improved earnings per share and also good revenues and guidance, investors and analysts were finally waking up to the potential of NIO, giving them target raises in the stock prices, and then we saw this huge rally up to my target price, $40 a share, which we have now exceeded already. So what could actually happen this time? As always, I have my nerdy Excel file with me in which I'm, tracking all the KPIs and, for instance, the earnings and last time my estimations and the actuals and the difference and so on. But let's not make it too complicated here. Let's just zoom in into what really matters. And these are my estimations here for revenue, vehicle sales, other sales, and also, well, the gross profit and operating income. So let me walk you through quickly. First of all, for the vehicle sales, I estimate they will make more than $612 million in sales in Q3. And that is based on the sales, which we already know, more than 12,000 vehicles sold. And I will say that the revenue price per the vehicle will actually achieve $50,000 on average this time. This is actually up a little bit from Q2, where NIO reported around $48,000 per sale. And if we're actually looking into the model split, we see that the sales are leaning more towards the ES8, the flagship model here, which is averaging around mostly 30% of the vehicles that are delivered. And this is kind of a high in the previous quarters. This has mostly been below 20% as soon as the ES6 was launched. And the ES8 is the car with the highest margins, has higher average sales prices in general. So this is why I think we see higher average sales prices over the total deliveries here. So this gives the revenues, so the vehicle revenues, a nice bump this time. And as you can see, the management was actually guiding for $550 million in sales. So that would be actually a really nice beat of those numbers. But of course, investors kind of know that this is coming because the deliveries have been reported far ahead. So this is not real news here and could be priced in the stock price already. Then regarding the other sales, I'm estimating 46 million, and this is actually an update to my estimations that I already posted with my Patreon. As you know, I make those kind of content posts earlier with my patrons. So these estimates that I'm making for NIO have been available to my patrons before, and for them I've been actually more conservative with the estimates that I published, but I'm now revising them more actually towards the guidance of the NIO management team here, because I thought the management team has been getting quite conservative in their guidance, and usually they know quite well that they will be hitting their targets if everything's going all right, and I think that will be the case as well. So I'm just going here with the guidance of the management team. So that brings the total revenues to 658 million, which is 60 million more than actually that they have been guiding for. So once again, really positive news here. Then regarding gross profit and operating income, there's a couple of things to watch. First of all, the vehicle margins and the gross margins. And last quarter, NIO has actually posted 9.5% vehicle margin, and that was kind of a blow. Nobody expected that really. I was way more conservative on that. It was really good to see that NIO can actually achieve that at this young age. And now with all this pent-up demand, I think it's really likely that NIO will be actually hitting that double-digit guideline for the vehicle margin. So that should be above 10%. And I'm actually calculating here with a quite conservative vehicle margin here of around 11%. could definitely be higher, but I like to be at the lower end this time. So that would result in a gross profit for 67 million, which I'm expecting. And that is not even including the credit sales that they can make. I made a video about this that nobody's talking about this, but actually, so NIO has actually the same advantage than Tesla is having in terms of that they, for each vehicle that they're selling, they're earning regulatory credits and they can sell them in the market. And NIO has been actually talking about that in the last earnings release, and I picked it up and said like, well, this could be a cool new revenue stream coming in either Q3 or Q4, and actually also in the next quarters beyond that. But I haven't included it in my estimates right now because I actually really don't know if they are coming in this quarter already. So I don't want to price them in yet. Once they are reported, I will definitely include them in future estimations as well. But for now, I will have them kept out. So this is actually also some upward potential to my personal estimations here. Now the next thing to watch is operating income, and this could actually have some bad news for investors in the box here, because there's two things to watch. Number one is the R&D cost, and the second one is the SG&A. So the SG&A includes, for instance, marketing expenses. As we have an increase of sales, that may also mean that NIO had to spend more on marketing efforts. And this could be really a kind of crucial number to watch, because if this turns out to be a lot higher this time, that could mean that NIO is quite inefficient in terms of the marketing campaigns that they're running in order to sell more cars. And this could mean that NIO in the future, when they increase more and more sales, that they actually have to pay much more marketing, and this could be eating up some of the profits. But at the same time, this number could also show us that NIO is becoming even more efficient even while growing the sales. So this number could hold a very bullish signal here. So here I've been quite conservative once again with an increase of the SG&A spend, and I've been calculating here with 150 million of my estimation here. And I also added 100 million in R&D cost. We know that NIO is ramping up their team for autonomous, so they are hiring new people all around the world, in San Jose, for instance, in California. And I'm really happy that they are actually doing that. So investing in the company in order to bring out new innovation, for instance, here in the autonomous fleet. This is good signals, but of course it's also costing money. And we also know that the ET7 is about to launch with the NIO Day in January. So we saw last time when they launched a new model that they have to increase testing for the vehicle and so on, and that all costs money, which are one-time costs, but at some point in time you have to have it on the balance sheet, right? So in total I would end up with 250 million for total operating expenses and come down to a loss of operations of around 182 million, which would actually be an increase from last quarter with 164 million. So you can see here that I'm not saying that NIO is coming closer to break even at this point in time, despite the record sales. And this could actually be even a miss in the profit estimations here of the EPS, which I think the consensus is around 0.16 or 0.17 for the other analysts out there. But I think here my estimations here are quite a bit more conservative in that regard, because I say that NIO is actually investing more at this point in time, not trying to please Wall Street at this moment and, you know, showing that they're on the clear way to profitability. I think the road is a little bit more bumpy. Sometimes they miss on earnings, sometimes they beat on the earnings, and this time I think it could actually even well be a miss in this regard. Then for the guidance, I think NIO will be guiding for 16,000 deliveries in Q4. As I have mentioned in my last video comparing Li Auto, Xiaopeng earnings and Tesla and NIO growth, I've shown that I think that Xiaopeng is hitting a little bit of a top here with a bottleneck in capacity. On the other hand, NIO here is ramping smoothly over time, not too fast, not as fast as Tesla. Although for Q4, I am expecting that NIO can actually match up with the speed of Tesla and growing between 30 to 40% quarter on quarter here, and giving them a nice ramp to a total of 16,000 vehicles, well above the 5,000 production capacity that we have seen. And we have the news now already that NIO is switching to the double shift, which will enable 10 to 12,000 cars run rate in the future. That will be necessary for next year for doubling the production once again. But I think we should expect a slow ramp. So I think maximum 6,000, maybe 6,500 vehicles produced in December. I'm also calculating with a slight decrease once again of the vehicle price, the average sales prices, just because I think as NIO is also putting out the EC6, they are prioritizing this over more ES8 sales, so that could have some impact on the average sales price here, although NIO could also maybe first produce the orders with the highest order price for the EC6 so far, so we'll see. I'm once again conservative here, but in total this would bump the revenues to more than 800 million, so 832 million. And on a year basis brings the revenues to 2.2 billion US dollars. And this is exactly my estimations for the business case for this year, next year to double once again. So far this looks pretty good, although in my estimations here that are really conservative, as you can see, I do think there is potential for some negative surprises in terms of, for instance, the marketing spend and the profitability expectations of Wall Street. On the other hand, lots of places where I think we could actually see some surprises margin-wise in terms of the regulatory credits and also even in terms of the overall revenues, because I think for the service business we could expect a little bit more even than I was estimating here. So what does it mean for the stock price? Well, first of all, I will be looking closely to the vehicle margins because this is important now that they have larger scale. How is it also reflected in the vehicle margins? I think they can reach the double digits, and that is good. And once again, I'm saying that I'm working on the new valuation on NIO with my Excel sheet here. And in this context, I'm looking at all the other sales that NIO has, like other revenue streams. And I'm expecting that we also see the first signals here during this quarter and next quarter that NIO is actually, growing in this regard much more than actually maybe on the vehicle sales. So that is another number to watch. Plus, of course, their answers about how they are increasing the capacity, because as we've seen with Tesla and Xiaopeng, this is really the biggest question of how fast can those companies now grow and execute on this large demand of electric vehicles driven by policy and other factors in China. So will I be trading this into the earnings by selling my position or buying more? No, actually I'm a long-term holder, and as far as nothing changes during the earnings in terms of the fundamentals of the company, there might be some news that they're changing the strategy, the business model, or that they have a negative outlook on the vehicle margins and stuff like that, then of course I am reconsidering my position. But so far I will be holding through this. I will not sell anything before the earnings, and I think also in case that the stock price reacts negatively after the earnings, I will also not be in shock and sell it off quickly if the fundamentals haven't changed, because I have this 5 to 10 years perspective on NIO and see this lots of potential in different ways that NIO can grow there. And I think it's quite short-sighted to think about a couple of different dollars here on the share price these days. That doesn't really make an impact if you're in for the long run. But what I can say is with the latest sell-off in after this huge spike, this is actually, I think, a good way going into earnings like that, instead of having this rally and everyday green and then we go into earnings. That would for sure lead to a sell-off. But now we actually have a little bit of a potential that it could actually have a surprise with a much stronger quarter than for instance shown here in my estimates, and then I think we have a good chance actually for a share price increase. Otherwise we still could have a sell the news event, but actually I think that's not too likely. I think we should rather groove in slowly now into this new reality that NIO has been revalued here as a growth stock and also as one of the most prospective companies out there in the EV space for China, but also soon 2021 globally. So I think fear of a too large sell-off after earnings are actually quite unreasonable. In case that it's happening, that might be actually not a solid market reaction to that. Maybe there is some profit taking and so on, and that could even show a buying opportunity in case that the fundamentals haven't changed and that there is not really some black swan event coming out of these earnings. So I hope you guys enjoyed my estimations. Definitely gonna check in afterwards whether or not this was accurate or not, and also what I think about the earnings. So stay tuned for that. And once again, thank you guys for all the likes, for the support of this channel, for all of the new patrons. This really supports us, helps us going, and actually also being independent. Some people are sometimes asking me whether or not we are paid to do these videos. I can assure you we have no affiliation to any of the companies that I'm mentioning. We are independent. We also don't even do any affiliate links or product placements and whatever. And if you support us on Patreon, this really helps us to stay like that. So thanks again for 30,000 subscribers. I hope you guys are watching out for my next video. And as always, this is not investment advice, just my own personal opinion. So do your own diligence and then be safe out there. Thank you guys for watching and see you next time.